Let's take a look at some charts on Zcash from this week's article on Brave New Coin. Really, the bottom line for Zcash is, even despite the halving, it's still got a large amount of inflation. I will show that. We'll talk about that. At the end of the day, all these coins, it's just bare bones logic, supply demand. If there are more coins being created than coins being bought and held, price will go down. It's that simple. Really that simple. If we compare Zcash to other privacy-capable coins, another issue with Zcash is it is difficult, well, let's say, in my opinion, to use privacy capabilities unless you are interacting with your own wallet to another wallet, because unless both addresses are shielded, then it's not actually a private coin or privacy enabled at all, which is the case on Gemini, for instance. If you are using shielded addresses, it's not actually a private transaction. So if we look at all these metrics, something else to remember is, because of the privacy capabilities, none of the metrics being shown aside from daily fees and market cap and GitHub commits, those are real values that aren't hidden in any way. If we look at daily transaction volume, transactions per day, and active addresses, for all these coins, there's a varying amount of obscuration or complete obscuration of those values. Like, for example, on Monero and Grin, you cannot see the active addresses. You cannot see the daily transaction volume. To me, those are the purest examples of privacy coins. If we look at Dash, Zcash, DCR, PIVX, they all have privacy capabilities, but they are not default private coins. XMR is clearly leading in market cap, fees, GitHub commits, Zcash leading in daily transaction volume that you can actually see. With shielded addresses, Zcash has even more daily transaction volume, even more transactions per day, and I think active addresses are blocked too. I'm not really sure there, but so this chart isn't the greatest, clearly, because of all those caveats, but it's still worth paying attention to. Again, if we hit on this inflation issue, they just had a halving that's not actually pictured here because it's probably pictured today on Coinmetrics. It wasn't pictured yesterday, but so inflation goes from 35% to half of 35%, essentially. It's still above Dash, it's above PIVX, it's above Monero, it's above BTC. The Zeek people will tell you that they're using this to invest in the ecosystem and the community, making Zeek better. It's good to pay developers. I agree with all of that. The other side of the coin is the market does not care. Okay, if supply is greater than demand, price will go down. It's that simple. It's black and white. I love that they are developing the coin and they're using state-of-the-art, cutting-edge research and technology that unfortunately just gets used for free by other coins. That doesn't help the value of Zcash, I'm sorry. In the near term, maybe in the long term, unless supply is less than demand, price will go down. If we look at the new mining rewards distribution, the Founders Reward has stopped with the first halving, which is another baggage for Zcash was the Founders Reward. Now miners get 80% of the distribution, along with the Electric Coin Company, the Zcash Foundation, and some grants to the community. I like this aspect of the coin greatly. I think all coins should have some sort of subsidy for development. Bitcoin does not have that. We do not pay the devs directly with Bitcoin rewards, so they have to sort of get paid elsewhere, which doesn't feel right, but it is the way it is. The question becomes, is this too much of a mining reward percentage? Who am I to say? This is what the community voted on, so this is what the distribution looks like. But in general, this 20% will be sold down, along with miner rewards, which are sold down anyway for the most part. But there's a give and take here. You're promoting the community, you're promoting development, you're paying developers, which is what should happen. But you're paying them in something that will get sold down and will affect the supply-demand curve, because this acts as selling pressure. It's less and less as the halving happens, but it's still selling pressure. If you look at transparent versus shielded addresses based on this specific website, I'm seeing very little shielded transactions as a percentage. It's still too hard to use shielded transactions, period. Like, that's just the way it is. Unless it is stupid proof or intuitive, obvious, people aren't going to use it. Especially if the people are barely using Zcash, most people aren't going to use shielded addresses. I'd love to see another website's analysis of this just to confirm that these shielded addresses are so low, but it's worth, if Zcash's whole thing is we're shielded, we're private, and nobody uses it, it's like, well, okay, is it really private? Do people really care? Now, if we look at transaction counts, this is non-shielded transaction counts. They are within the previous range of, this year. They're certainly up historically since 2018. Mean transaction sizes in USD are slightly up as well. I think there's some halving response here, but clearly the market, it's if the market was dead and dying as a whole in like 2018, maybe the market would care, but right now Bitcoin and ETH are kind of sucking all the fun out of the room for any altcoins. ZEC fees extremely low, which is good. Block size is extremely low, which is, again, says no one's really using this coin. At the end of the day, there's tons of real estate to be used. If you contrast this with ETH or BTC, fees are rising. Mean block sizes are hitting their ceilings, at least for ETH, maybe not for BTC. But this just says, as a whole, very little actual use on the chain. If you look at active addresses in the fill here, minus this does not include shielded addresses, I believe. Active addresses are rising, so there's clearly increased use since July. NVT, which is an inverse metric of economic utility relative to market cap, is historically low, but it's kind of all over the place as a metric, so it's hard to really take seriously. In a vacuum, this is bullish, though. You want to see rising active addresses and falling NVT. That says that the market price has not priced in actual on-chain activity, as in the coin is undervalued currently. If we look at another metric, MVRV, market cap relative to what's actually being moved on the chain. Historically, this has topped out around 1.8 to 2 in the red here. If you compare that to price, the correlation is there. Recently, though, it's struggled to get above 1, and it's around 0.7. So there isn't any like clean black and white correlations here that are probably worth paying attention to, but if MVRV gets to 1.5, 2.2, somewhere around there, then it's probably time to say, all right, this market's too hot, it's overbought. Right now, it's just neutral, as far as I can see. If we look at miners, interestingly enough, we had a new miner released in June, and it is heavily profitable. The profitability was 2x this before the halving, obviously, but it's still a highly attractive profitability. I don't know how many of these actually exist in the wild, because it's Bitmain and they were having trouble with distribution and supply and that sort of thing. But if you're an agnostic miner looking at profitabilities, this is definitely one high on the list, just because you're going to quickly get your ROI as compared to other other ASICs that have been released in 2020. And if you look at the hash rate, it's just been steadily increasing, which may point to, the profitability of these ASICs is pretty good. So if ASIC profitability is high, hash rate should continue to increase, difficulty slowly increasing as well. This is healthy for the coin, any proof of work coin. You want to see hash rate increasing, you don't want to see hash rate decreasing. That just speaks to the security of the network as a whole. If you compare this to ETC, for example, ETH Classic, they're at risk for 51% attacks consistently. So you can say Zcash is more secure than ETC. Looking at Google Trends for Zcash surprised me in that there's a breakout here. It's harder to see if we zoom way, way out. Obviously, since 2016, interest is quite low relative to where it was in 2017, 2018. But looking at the past 2 years, we're breaking out here on Google Trends, which is a bit of a divergence from price because price hasn't moved yet. So maybe there's a trade here that maybe I'm too bearish based on Google Trends, because this looks very bullish to me. Most of that search history and tracking is relative to the articles coming out around the halving, is my guess, because price clearly is just lethargic, hasn't moved. You can argue just looking at it, W double bottom, but if we look at VPVR, volume, RSI, 50, 200, EMA, yearly pivots, and Bitfinex open interest, VPVR tells you it's exactly where it should be based on historic volume. Price likes to live where there's a lot of volume. There's a lot of buyers, there's a lot of sellers here. It's kind of at an equilibrium. Upside would be limited to local high, yearly pivot, local high, VPVR, so around 130, kind of a 2x from here. It doesn't look like a springboard at this point in time. it's as neutral as it can be. 5200 is neutral. It's at the yearly pivot. It's at the VPVR. RSI is 50. Open interest is heavily net long, which isn't too much of a concern for altcoins specifically on Bitfinex. The open interest is kind of meaningless, but always good to look at. So overall, for the USD side of it, the trend is kind of just It could 2x from here. The trend isn't projecting that. It's just saying it's neutral and the resistance is 2x from here. I don't really see that on the cloud either. The cloud, it's got a ways to go. And if it perks up above 78, then at that point in a vacuum, I'd say, what, it has a pretty good chance at 130 to 180. These local highs is what I'd be watching, and this cliff is what I'd be watching. So 110, 130, 180, those are the levels I'd watch for. Right now, the trend just doesn't, there's no momentum here, basically. And looking at ZEC BTC, it's at all-time lows, pushing all-time lows. It's still within this multi-year downward pitchfork that I just can't shake. So it looks like it's headed lower. I mean, it's got no hope. It's below the 200, below the cloud, below the median line on the pitchfork. The edge of the pitchfork is around 002. So I don't see ZEC really springing back anytime soon on the BTC pairs, even though the USD pairs look pretty good. There's a bullish divergence here, arguably, with lower low in price, higher low in RSI. ZEC BTC longs are comically net long here. So if this does go low, these longs are going to be in trouble. Most of these longs are still from 011. I don't know. Just looking at this scares me, because if the dip keeps dipping, then those longs are going to be nervous for sure. So overall, fundamentals look mediocre despite the halving. I think it's going to take some time for supply and demand to catch up with one another. The USD pair looks neutral at best for trend, and the BTC pair looks catastrophically bad, honestly, because it's breaking all-time lows. So this is going to take some time. It might take 2 years for Zcash to recover and reach some sort of neutral territory on trend.